Yeah, good morning, everyone. So, positiveness in the US market continue, though the old Dow was negative, but tech stock has taken the market positive, and the overall S&P in the US were positive. Asian markets are indicating bit mixed reactions. Some of the markets are negative, but most of the markets are indicating positive directions and are up by around 1%. Commodities are seeing good movement, and most of the commodities are positive. Aluminum up by around 1%, copper 0.5. Oil has also moved up by around $1.5. Iron ore has again moved up over 100, and it's now at around 101 and up by around 1.5%. And the steel is also indicating positive trend. Dollar index, which moved up to 101.7, has now bit softened and came down below 101. This may be leading to the commodity moving up. Overall, after negotiations between US and China, things are becoming a bit positive, and we are seeing a continuation of the trend which has started on the Monday. Now, now for India also, we had seen quite a bit profit booking yesterday. So quite possible we may reverse the trend today. Outlook seems positive for the day. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a positive note, and we're likely to witness some positive momentum during the day. On the technical front, as of now, we are witnessing that the Nifty might face a resistance nearby 24,670 levels. If it surpasses that level, then the momentum is likely to be carried forward towards to 24,740 to 24,700 levels. On a low side, 24,500 is the first support levels. If it's break that levels on the closing basis, then we might witness some sort of a profit booking, which might drag a Nifty towards 24,440 to 24,400 levels. The view is definitely positive as long as Nifty sustains about 24,000 psychological mark, which is also support provided by its 200 DMA. The only concern is of a bank Nifty from the last 2 to 3 trading sessions, we are continuously witnessing a very zigzag momentums into the bank Nifty levels. On every dips, you are getting a buying thing, but on every resistance also, we are facing a selling pressure. So, which indicates that it is trading in a range bound trading session within the levels of 55,500 to 54,000 levels. But for the today intraday purpose, the resistance is placed at around 55,340 about at level 55,600, 55,840 can be tested, whereas the support is placed at around 54,770, 54,500 levels. So the view is positive. Try to hold on your long positions, but with the strict stop losses. Coming towards the stock specific, Dr. Reddy really looks good on the daily chart. The stock has given the formations of the inverse head and shoulder breakouts, which gives a very strong indications on a positive sign. We are looking for a target of 1290 levels. By maintaining a strict stop loss for 1180, one can generate a long positions. That's it from my end. I request Amit to take a call forward.
Yeah, thank you. Good morning, everyone. So, on the derivatives front, as we witnessed in yesterday's session, there was some sort of liquidation of profit booking from the upside levels, due to which we are seeing that the call positions have added up sharply in yesterday's session between the range of 24,600 to 25,000 mark. But still, on the weekly basis, as I mentioned yesterday, that 24,500 will act as an immediate supportive base for the Nifty. If that level gets broken out, then we will again witness some profit booking in the market, but currently market strength seems to be on the positive side. If we look at the overall structure in today's session, we are seeing the gift nifty is likely to open 80-90 points on the positive front. On the upside, again, nifty is likely to face resistance between the range of 24,900 to 25,000 mark. So in the first half of trading session, we might witness some positive momentum in the market towards the 25,000 mark. Once nifty gets a clearance and closing about 24,000, 25,000 level on the spot basis, then we will see major liquidation from the call rider front, which will take the new long positions in the market towards the 25,200 to 25,500 mark. Currently, the Nifty is likely to trade between the range of 24,500 to 25,000 mark till the further breakout of the upside level gets um, immediate responses. So currently, overall strength seems to be on the positive side. Hold the long position with the support of 24,500 level, while India VIX again yesterday decreased by 1%, giving close near 18 level. India VIX is still trading above its resistance zone of 14.5. Once India VIX goes below 14.5 level, then we will witness some fresh momentum and stable buying in the market. Till the time India VIX is trading above 14.5 level, till that point of time, we will witness some kind of volatility or fluctuations in the market. So currently hold a long positions as per the stock specific and sector specific front. Kalyan Jewelers delivery, Geo Finance and Max Health looks positive, while on the negative front, Hudco Paytm looks negative. So that's it from Reddit front. Thank you.
Good morning, everyone. Yesterday, we attended the con call of SRF Limited. If we look at the results, the company had given the ahead of expectation numbers. Overall performance improved with the revenue growth of 21%, and the operating margins were at 23.2% for the quarter. And the margins increased by around 330 basis points on a YY basis. If we look at the segment wise performance, the chemicals and performance films business, which was formerly known as packaging films business, has performed well. On the contrary, technical textiles and other business degrew, resulting in the margin contraction. Company continue to see the robust momentum for the specialty chemicals and the fluorochemicals business. During the quarter, fluorochemicals has delivered the record high sales, domestic sales for refrigerant gases. This is mainly from the room and air conditioners. The management has guided for the 20% growth in chemicals business for the FY26 as well as for the over the next 3 years. And it has seen various challenges from the Chinese imports that has led to the margin contraction for the quarter. The company is guiding for the margins in the range of 25 to 26%. Currently, the stock is trading at a PE of around 48 times to FY26 earnings, and we are long-term positive on the stock. Yesterday, Cipla Limited posted the results in line with expectations. Revenue grew by around 7% on a YY basis, where domestic revenue grew by 9%, and the US business delivered the muted growth. South Africa and global access revenue was up by around 37%, while Europe and emerging markets were up by around 1.4%, while API business was up by 9%. During the quarter, EBITDA margin reported at 23.3%. The company is guiding for the EBITDA margin in the range of 23.5 to 24.5% on account of expected loss of sales from Revlimid, which was launched in 2023 with a view to get the benefit of the patent expiration and enjoy high margins. Also, the margins guidance is in this range is because of the US tariff price control situation. Some more positive from the con call are companies, all 5 India sites audited by US FDA in FY25 were classified as no action indicated. That reflects the high compliance standards. Further, it has spent 5.5% of sales on R&D during FY25, and going forward, it aims to invest in R&D in the range of 6 to 6.5% range of revenue. Growth will be mainly driven by the continuous market beating growth in the domestic market and limited competition launches in the US. The stock is currently trading at a PE of around 23 times to FY26 earnings, and we are positive on the stock. Thank you.
Good morning. Aditya Birla Capital results has improved. PAT came at 864 crore versus quarter on quarter 708 crore. In the con call, the management said that they have completed the amalgamation of Aditya Birla Finance with Aditya Birla Capital, which now consists of 2 primary business segments, NBFC lending business and the investment business. In Q4 FY25, NBFC portfolio grew by 20% year-on-year and 6% quarter-on-quarter. The management maintained its guidance to grow the overall portfolio at a CAGR of 25% over the next 3 years, with expectations of ROE expansion primarily driven by margin improvements, productivity enhancement, and changes in the product mix. Their HFC business in FY25, the ROA came at 1.46% and ROE came at 11.03%. The management expects the current growth momentum to continue and aims to gain the market share. As the portfolio scales up, they anticipate significant improvement in operating leverage and ROA, targeting an ROA of 2 to 2.2% within next 8 to 10 quarters. The asset management business, the average AUM for mutual funds grew by 15% year-on-year, totaling about 3.8 lakh crore. In insurance business, the first year premium grew by 34% year-on-year with robust growth across both banking and proprietary channels. Management expects to grow the individual first year premium at a CAGR of 20 to 25% over the next 3 years and expand the VNB margin to over 18%. In general insurance, the combined ratio improved from 110 in FY24 to 105 in FY25, and management expects the combined ratio of 100% in FY26. The partnership business grew 34% across all existing partners as well as new partnership with Bank of Maharashtra, IDFC Bank and Axis Bank, bringing the total of 11 banks partnership. The management has guided over the next 3 years they aim to double their loan book, and the company anticipates improvements across all segments in FY26. So we are positive on the stock. The stock is trading at 1.7 times trailing price to book value ratio. Thank you.
Good morning. A few con call updates. Key highlights from the Tata Steel con call. The volume growth guidance is 1.5 million tons increase, mainly in India. In FY26, the capex will be around 15,000 crores. 75% will be allocated to the Indian projects. Ludhiana electric arc furnace will be commissioned in the next 12 months. The cost savings target in FY26 is around 11,500 crores, out of which 4,000 crores will be savings in India due to productivity procurement, low capex ROI projects, and 3,000 crores in UK, which will be mainly due to 29% fixed cost reduction. The Netherlands EBITDA turnaround is from negative 426 million euros to positive 90 million euros. The Q4 deliveries were at 1.75 million tons, which is highest in 6 years. FY26 coking coal cost is expected $10 per ton lower and iron ore $10 per ton higher. The steel prices expected in India are 3,000 per ton higher QOQ, and in Europe euro 20 to 30 per ton higher QOQ. The outlook is positive on this stock. Few highlights from the Kirloskar Ferrous Industries con call. The pig iron volumes and margins improved in Q4, but FY margins were impacted by lower realizations. Power and fuel cost reduced from 8.6% to 6.7% year on year. The FY26 casting volumes is targeted at more than 1,60,000 tons from 1,32,000 in FY25. For tubes, the target is 2 lakh tons in FY26. For pig iron, the management is targeting around 7 lakh tons. The company-wide EBITDA margin target is 15%. The FY26 expected savings will be 80 crores from solar and 40 to 50 crores from in-house iron ore. The capex guided for FY26 is around 500 to 600 crores. We are positive on the stock. Thank you.
Good morning. Tata Motors posted the result marginally above expectations. Revenue from operations and EBITDA grew by 0.5% year on year. EBITDA margin came at 13.9%. PAT is above expectations and stock is currently trading at P of 11 times FY26 EPS. Company's standalone result is also improving and JLR result is in line with expectations. We attended con call of Tata Motors. So company achieved highest ever revenue and PBT in FY25. And company's net automotive debt is now negative. FY26 capex will be same as FY25. In JLR, China remains weak, but strong demand in US. Defender continues record sales. Range Rover sales up by 12%. In commercial vehicles, truck and bus sales improved, especially due to better freight movement and infrastructure development. Company expects single-digit volume growth in FY26, stronger in SCV and buses. In passenger vehicles and electric vehicles, CNG volumes grew 60%, now 25% of PV portfolio. EV volumes declined 13% year on year due to fleet slowdown. Company targeting double-digit EBITDA margin through cost reduction, better mix, and higher localization. So our overall outlook for Tata Motors is positive. Hero MotoCorp posted the result in line with expectations. Revenue and EBITDA grew by 4.5% year on year. EBITDA margin came at 14.2% versus expectation of 14.1%. PAT is in line with expectations and stock is currently trading at P of 15.9 times FY26 EPS. We will provide more details about Hero MotoCorp after the con call. Thank you.
Yeah, 2, 3 results which has done comparatively very well. That is, Dalmia Bharat Sugar has come up with very strong numbers, wherein revenue grew by around 36% year on year. And EBITDA margin also has improved substantially to 19% versus last year 16%. Stock is trading at around 8.76 times TTM APS. So here the result seems quite strong and the stock can see movement in the today's trade. Company got advantage because of higher yield which they were able to generate in the sugar sector and benefit of some acquisitions. Then Sai Life has reported very strong numbers. Revenue came in at 580 crores, grew by 32% year on year. And also EBITDA margin remains stable. The PAT has come at 88 crores versus last year 56 crores. Share is trading at around 42 times Q4 annualized earnings. So this stock can also see good improvement possible. Glaxo came up with strong numbers, though the revenue was in line or marginally lower, but the margins has expanded substantially. The gross margin has expanded by around 400 basis point year on year, and EBITDA margin came in at 34% versus expectation of 29%. Last quarter 30% and last year 28%. The main reason for the expansion in the margins were higher gross margins, wherein they were able to gain on account of new product which they had launched in last 2 years. So the new product launch is doing exceedingly well, and also vaccine is coming back and is doing well. Company has indicated that these margins are sustainable. Yearly margins of 31% is sustainable and can see some improvement. And also, the growth in the new portfolio can continue in double digit. And company has also planned for a few more new introduction of drugs in their global portfolio, especially in oncology oncology sector. So that will keep stock live. Though no doubt the valuations are at around 46 time FY26 earning is on the higher side. But looking at their performance in last many quarters and also the expectations, one can continue to hold or accumulate the stock on any corrections. That's all from us. Thank you very much and have a good day.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold and silver prices have opened gap down. We are expecting some pullback as gold is supportive at 93,000, 92,500. All in all, there could be some pullback till 93,600 to 700, whereby again selling pressure could be witnessed. And so there could be some range bound movement from 92,500 to 94,000. And in silver, we are expecting prices to pull back till 96,500, then witness a sell off. One can maintain a stop loss of 95,500 as 97,500 as a stop loss, and on downside again 95,500, 95,000 is the level where one can book profits. Copper looks positive. Buying around 855 is recommended with a stop loss of 850. On upside, 860, 65 is the level where one can book profits. Also, zinc, one can buy around 254, 50, 255 levels and maintain a stop loss of 253. On upside, we are eyeing for 258. In crude oil, one can initiate a buy around 53.80, 53.70, and on upside we are eyeing for 54.50, 5500 on upside. So buy on dips is the strategy. Wherein natural gas we are expecting some correction. So selling around 310, 312 with a stop loss of 320. On downside again, it is expected to test 300, 295. So sell on rise in natural gas is the strategy. That's it from us. Thank you very much.